welcome back to the Genesis mission. As promised, today I'm here to present you with the 19th of 92 biotech stocks that are showing powerful signs of a potential breakout. But before we move forward, I do need to reiterate, this is not financial advice. I'm just sharing my personal trade ideas and recommend that you do your own due diligence. Before we get to today's pick, let's do a quick recap. We've been taking a much more cautious approach lately as we monitor the escalating situation in the Middle East. The ongoing conflict in Iran has been keeping the broader markets on edge for weeks now, and things could shift dramatically, either negatively or positively depending on what the US government decides to do after the Tuesday 8 p.m. deadline. Because of this uncertainty, we are watching the S&P Biotech ETF XBI chart very closely. So far, the XBI is holding strong, having just bounced beautifully off of our critical red trendline support. However, if the macro environment worsens and the ETF breaks down below that line, that is exactly where we will decide to go on the defensive and tighten our stops. With that out of the way, here is today's pick. RLAY Therapeutics, ticker symbol RLAY. In simple terms, RLAY acts as a high-tech motion capture studio for cancer cells, using advanced supercomputers to track how disease-causing proteins move so they can build drugs that lock them down perfectly. They are aiming to fix a major issue in cancer treatment by creating highly targeted therapies specifically for breast cancer and rare vascular anomalies that attack mutated cells without destroying healthy ones. The massive near-term catalysts we are watching include clinical data expected in the first half of 2026, which follows their recent FDA breakthrough therapy designation. It is also highly important to note that top-tier funds have been aggressively buying the stock, and the company has secured enough cash to fund their operations all the way into 2029. Moving on to RLAY's chart. As you can see, the trend line finally broke back in December 2023. But the breakout went on to fail and the stock dipped below $2. However, it has since been consolidating for the last 12 months to build a rock-solid base, and it finally broke out of this consolidation this month. My research suggests that we are in the beginning stages of what could be a massive run over the next few months. If you are looking to buy it today under $14 a share and don't want to risk too much, then a daily close below $10 could be a good place to exit until you build enough conviction in the stock to go back at it again. That said, if the breakout holds, my bull case is $30 a share within the next 12 months and $50 a share within the next 24 months. With that said, thank you for your time. Please remember to like and subscribe so you can be notified when I put out the video for the next biotech play. Thanks again, and I'll catch you in the next chart.